Morning, doesn't it? Looks bullish at the bottom edge. Nice opportunity to go long equities off those low prints. Good rally into the cash open. The cash open itself, relatively constructive overall. However, take a look at the spike we got just in there at the highs. That's obviously telling us that the volatility curve is a little bit overbought at high prices. That gives you a very obvious opportunity to maybe work back into that short sell flip. And of course, if we take it down into a 1 minute chart, we can drill down a little bit closer to find exactly where that volatility did change itself around. And you can see it for yourself. There it is right there. You see the candle? There's the candle right there. There's the one in question. So that's obviously telling us that this is perhaps going a little bit too far in the early stages, allowing you to work back into that as a possible sell into those high prices. And, obviously that sales came in quite nicely. Now into the bottom edge, don't really see an opportunity yet to deal. You can see there was a possible buy on this candle here, but it was green already. There was a possible buy on this candle here, but it was green already. So they're not trades. They're not going to be trades. Remember, this is just looking at the shape of the curve against the front end, against the back end. So it's just trying to find those little contango backwardation candles that give you a little bit of a short-term edge in those areas, and that's exactly how this is played, those short-term edges working in your favor. So when we're looking at the volatility, of course, this is always a very, very interesting line here. This is called the gamma line. The volatility of volatilities, or the volatility of the deltas, the pace of the deltas, in other words, the rate of change of a delta is called the gamma. Well, the volatility of the volatility line is what we would then call the gamma as well. So this is the gamma line. You can see it's had a very strong bullish open, but it's subsequently sold off a little bit. Now, the thing about gamma is you don't really, a lot of people obviously talk about gamma in terms of as it drops, but you don't really get the big hedging coming in. You get unwinds, but you don't get net short selling coming in against that position until you start breaking keys. So obviously when you've got a positive gamma, and we can see that at this stage, we've got a positive gamma. Where's the next key level? Well, the next key level would be a break of 412. If it doesn't break 412, it doesn't matter how bearish this line gets. It's going to stay bullish. Because obviously the short selling hedge would start coming in as we break below that type of level there, wouldn't it? So that's where we would start thinking about that as a possible short sell. If it stays above here, it doesn't matter how drop the black line gets, it's still going to hold on to that quality of buy side business. So we've got to remember that about delta hedging. Delta hedging only happens when you break the delta keys, the delta key levels. So whilst this is not bullish when it drops, it's not really bearish until the price actually sells at bottom edges, not top edges. Okay, so just bear that in mind when you're using a delta line like this or a gamma line like this. When we look at the calendar spread, this should be more in line with the actual price action. So if the calendar spread, this is VXX against the VIX itself. So when we look at VXX against the VIX, this is obviously a calendar spread. We can compare that to VXX, VX2 against VX1, but of course you're going to get that lagging type piece of information if you do that spread, or you can do UVXY against the VIX itself to try and see. And you can see they're almost identical. VXX, UVXY, almost identical. They should be almost identical, of course. But you get the basic idea that this is not bearish yet. So that's a good idea. So whilst it's not bearish, you're obviously still looking at this as a possible buy at bottom edges. You're going to start looking for the right trade. So what are you looking for? You're looking for red candles that are down ticking on this spread. So we saw that there was a red candle here into a low price, that the spread was down ticking, probably a good enough excuse to buy into that trade there. And then that would have given you a nice little buy opportunity into that prior swing. The prior swing, of course, being this price here. And that takeaway has been relatively good so far. Into the top edge, we need to see this improving. At the moment, it's not. So that's something of a little bit of a concern, that this is not improving at the moment. And obviously, we just overlay that with the volatility gamma line. And we can see that the gamma line really not improving either. So at the moment, it looks kind of bleak for the buyers to take the market higher at this point. So perhaps a little bit of sell pressure, but as long as we stay probably above the 412s at the moment on the SPY, it's going to retain at least some delta, and obviously that's where we're going to be watching. because that's going to be the critical price at the moment for us here. In terms of the bulls, of course, they can unlock some more money if they can take 413 bid. And if they can take 413 bids, you're obviously in pretty good shape.